morning. You're watching Business World Live. I'm Danny Laurel. It's 10:30 a.m. this Tuesday morning. We're about an hour into the shortened trading day. Let's kick off with our banner story. The Philippine GDP could plunge into negative territory this year as the COVID-19 pandemic continues to hurt our economy. Fitch Solutions macro research now says growth for 2020 could contract by as much as 2%, with a recession on the horizon in the wake of the COVID-19 crisis. Fitch says the impact of the lockdown measures, which started in mid-March, have become significant on growth readings. It also says restrictions through and into the month of May pull the economy into a recession. The latest downgrade comes just a week after Fitch slashed its GDP outlook to negative 0.5%. That was a turnaround from a growth forecast of 6.3% for 2020 before the pandemic hit. The first quarter GDP shrank 0.1%. That's the first contraction we've seen in over 2 decades. Meanwhile, a survey released by the Employers Confederation of the Philippines showed that 2/3, or 212 out of 347 companies it had surveyed, have put expansion and investment plans on hold due to the public health emergency. Metro Manila, Calabarzon, and other high-risk areas are still under an enhanced community quarantine until May 15. President Duterte addressed the nation early Tuesday morning through a pre-recorded speech. However, he ended the address without any announcement about the post-May 15 scenarios. Presidential spokesperson Harry Roque is expected to hold a briefing at noontime today. Fitch Solutions says that while it expects restrictions to be eased in the second and third quarters, external demand backdrop will still be subdued. Fitch also notes further fiscal stimulus is a must to counteract a slowdown in the economy. It says a large fiscal package could boost local confidence, noting that it believes the government has scope given the improved reserve buffers as well as public debt, which is over 41% of GDP in 2019. Now, speaking of fiscal and public debt, especially for the first quarter and what we're looking at, we actually do have the figures for the month of March in terms of our budget deficit. That was up by 1.83% to 59.5 billion pesos. So this is on the back of our revenue collection actually up by close to 20% to 273.7 billion pesos. But our spending nevertheless up, but still lower than how our revenues were collected. So that was up by close to 16%. Our non-tax revenues were actually increasing by more than 200%. Take a look at that, to close to 97 billion pesos. But our tax collections dropping by 11%. So this on the back of the BIR collections dropping by 10.7% in the month of March, as well as the Bureau of Customs collections dropping by 9.4%. They attribute this to the slower economic activity caused by the ECQ measures. And also, as I mentioned, the Bureau of Treasury's income actually surging by 540% in the month of March. So that again brings our first quarter year-to-date budget deficit narrowing by 18% to 74 billion pesos. Now, is this a good or bad thing? A very mixed reaction here. You've got ING's Nikki Mapa saying that this shows the inability of the government to collect the revenues amid the ECQ. Now, recall that the deadline for payments for the BIR was actually extended 4 times already, and with the lack of activity going on during this period, it's been very, very difficult or softer collection on taxes. This has been warned several times by the Department of Finance that we will be seeing a softer collection of taxes. Now, according to the Treasury, the deficit to GDP ratio for the first quarter stands at 1.65%. That's actually lower than what we were seeing in the period last year, and very far from what the government is seeing for the deficit to be hitting 5.3% of GDP for the whole of 2020. So still much more spending to be coming here. And of course, this on the back of Nikki Mapa of ING also saying that the ECQ for some delays in spending. So he says that we can expect the same for the second quarter. Government will be unable to collect taxes, and at the same time, it will be difficult for the government to hit their spending targets given this lockdown. Now, Finance Secretary Sonny Dominguez, as I mentioned, has said that he expects the budget deficit to hit around 1 trillion peso this year, especially as we spend more and more on the pandemic. But he did mention, at least last week, that there are no plans yet to ask the Congress for a supplemental budget despite the fact that there are rising revenues. Now, this is something that Nikki Mapa has, weighed in on. He says that we are now in need of a fiscal rescue, and this follows what Fitch says. There needs to be more fiscal spending. And he does mention that the job retention or job replacement should actually be the focus right now, instead of just holding on to just the fiscal targets. And in fact, Dominguez has said that the Philippines still has fiscal space to fund the virus spending. He also called earlier on in their press briefing at 8 a.m. today the urgent passing of the Sitira bill before June 3. Meanwhile, over in the central bank, Benjamin Diokno, the governor of the BSP, had said that every percentage point increase in this budget deficit would actually represent 200 billion in new spending that we can use, especially in job creation in this moment. So he does say that emergency employment will have this higher multiplier effect. So pushing for more fiscal stimulus here, even if this does have an impact on our fiscal deficit. So, just very quick peek on our peso here. I just wanted to check in on that because this, of course, has is very impacted by the fact that we have a deficit. You can actually see our peso strengthening a touch. We are closing in on 50. We are 50 spot 382 to the greenback. That is on the back, of course, as I mentioned, on a narrowing fiscal deficit that some economists have said is not necessarily a good thing. Okay, checking in on markets this morning. Analysts have said this would be trading sideways because of the fact that we're still awaiting on a clear decision. There have been some leaks on an extended community quarantine, and President Duterte had hinted earlier on at 8 in the morning that there will still be several areas under ECQ. So that is being digested right now in the markets. It's down by 0.5% to 56. And there will 0.5% to 56. And there will be more clarity on that at 12 noon. So a lot are probably waiting on bated breath. Now, this, of course, comes on the back of optimism that we had seen at the beginning of the week because everyone had hoped that this announcement would come last night. And in fact, on Monday, we did see the bourse ending up by 0.8%. And this, according to Regina Caps, Luis Lumlingan, investors hopeful on this economic restrictions ease. Now, what is going to be happening? So there's a lot of uncertainty still there. According to AAA Equities' Chris Mangon, retail investors were especially active in yesterday's trade. Now, another thing very interesting that I wanted to report here is this article from Bloomberg, which had interviewed AAA Equities and COL Financial. These are, of course, online and app-based trading platforms. They have said that they have seen a surging interest in trading. So because people are actually stuck at home right now, newbie traders are trying their luck during the lockdown. According to President of AAA Equities, Matt Cabangon, the number of customers opening accounts have now doubled. So a lot of trading going on. And this from Conrado Bate. He is, of course, the CEO of COL Financial, saying he's seeing a significant increase in retail investors, which are activating their old dormant accounts and also topping up investment. So COL says they have more than 330,000 investors right now, around 72 billion pesos in client assets as of the end of last year. Another thing that AAA Equities is saying, a lot of overseas foreign workers are now tapping into the all-digital registration process and starting to trade. Now, this, according to the PSC, we only have data until 2018. Online trading actually jumped 61% in 2018, but still, of course, a lot still needs to be done. When they were asked, of course, there's still 1% of the Philippine population that are actually invested in local equities. So more on markets later on in the broadcast with Trading Edge's Ron Acoba. Meanwhile, checking in on the headlines today. The government is planning to import 300,000 metric tons of rice as buffer stocks ahead of the lean harvest season, which runs from July until September. The Agriculture Department says this will be done through a government-to-government scheme under the Philippine International Trading Corporation. The DA said talks with rice export partners such as Myanmar, Vietnam, Thailand, India, and Cambodia have already started. The department insists that the imported supply will only be used as a contingency measure for the lean months since the next harvest season is still in the fourth quarter. Philippine Institute for Development Studies senior researcher Roelano Briones said the imported rice stocks will not affect the local prices since it only serves as a buffer stock. However, Union Bank chief economist Carlos Asuncion said the move could be highly inflationary if not done correctly. The Magsasaka Party List, on the other hand, is urging the government to focus its support to some 200,000 local farmers affected by the implementation of the rice tariffication law. Data from the Statistics Office showed paddy rice harvest contracted by 3.6%. That's in the first quarter of the year. The House Committee on Banks and Financial Intermediaries has approved a measure which allows the transfer of the banks' bad loans to asset management companies or AMCs. This is amid the expectation of a spike in non-performing loans in the wake of the COVID-19 crisis. This bill encourages financial institutions to sell non-performing loans as well as other properties acquired in settlement of loans and receivables to the asset management companies. Now, these firms, which specialize in handling distressed assets, can restructure or condone the debt, undertake other restructuring related activities to dispose of these bad loans. Now, under the bill, the transfer of these non-performing assets will be exempt from documentary tax stamp, capital gains tax, creditable withholding tax, as well as VAT. The measure also provides that any loss incurred by the financial institution as a result of the transfer will be treated as ordinary losses. Finance Secretary Sonny Dominguez says he is supporting this bill despite the possible, quote, revenue erosion for the government. NEDA Acting Secretary Carl Kendrick Chua also said it's possible the bill will be certified by urgent by President Rodrigo Duterte. A House committee orders the NTC to explain why it should not be held in contempt for issuing a cease and desist order against ABS-CBN. In a letter, House Legislative Franchises Committee Chair Franz Alvarez noted that NTC did not uphold its assurance that it will allow the media giant to continue its operations, quote, until such time that Congress has made a decision on its application. Alvarez stressed that NTC's issuance of the cease and desist order is a clear disobedience to the power of the lower house. The letter, which is dated May 5th, says that the NTC has 72 hours upon receipt of the order to explain their side. The office of the House Speaker Alan Peter Cayetano told reporters that the letter was received by the NTC on Monday afternoon. ABS-CBN is expecting to lose some 35 million pesos per day in foregone advertising revenues after it had gone off air. The Lopezes, though, reiterated that the network is not for sale. This is shortly after Dennis Uy, a Davao-based tycoon and also a close friend of President Duterte, had denied reports that he is looking to acquire ABS-CBN. As everyone grapples with finding normalcy, an increasing number of people stuck at home have actually gone into stock trading, especially online here in the Philippines. And we have someone very important here that loves to give tips on trading. Welcome to the show, Rona Coba of Trading Edge.
Hi, good morning, Danny. Thank you for having me.
Good morning, Ron. Now, you're going to be seeing my terminal here and how we're performing, but I actually wanted to kick off and do the broadcast on specific stocks. And I want you to share your knowledge with some newbie traders, which apparently are, starting to go back into the markets at this period in time. And just very quick question before I dive into the stocks. Is this a good time to be picking up stocks?
Well, it's for me, it's a good time to invest, not necessarily trade, because we're still while we have rallied by a lot since the March low, I still see a lot of uncertainties in the open. Volatility is still expected to increase, given for example the lack of direction whether we will open our economy post May 15. So there are these things that are currently weighing sentiment. So I would be still cautious in terms of trading actively. But as of to investing, I mean, lengthening my time horizon and putting my money and just leaving it there, given the fact that current levels are 20-30% away from, let's say, 2019, 2018 highs, then
Right.
perhaps it's a good time to leave money there. But again, not necessarily to trade yet.
Okay, so if you actually have cash, sitting there and some
Yeah.
savings, actually a nice time to have it if you don't need it urgently. Ron, let's talk about specific stocks and your views on them. Let's kick off with Wholesale because this is actually the stock that was being watched yesterday. It fell by as much as 27%. Just checking in on my terminal here. I'll ask my producers to show that to you. It's still continuing its losses. That's down by 11% this morning, and this of course on the back of them abandoning plans to sell on the back of the
Yeah.
PCC not approving. Tell us, what are the prospects for this company? If what's that drop warranted? Is that really linked to the fundamental business model as well, or does that mean that the surge was really artificial just on the back of this rumored acquisition?
Well, first and foremost, the reason why the stock was holding its level at around 12 to 13 for the longest time, even when the market is dropping, is precisely because of the fact that San Miguel was poised to acquire and tender their shares at that particular level. So now that the deal is apparently off, then it's a question of at what price and who will be the one to jump in and acquire Holcim, because globally Holcim is
Okay.
still for sale. I mean, uh, global headquarters is still mandating the sale of the Philippine unit of Holcim. So the question is at what price now that San Miguel is out of the table.
What's your outlook though on cement players now? The lockdown has, of course, halted all construction activities, but
Yeah.
we have some indication that that is going to be continuing. The finance secretary is saying we're not going to compromise the build, build, build. This is actually something we really need. And you've got, I'm gonna pull out here Cemex and Megawide as well.
Yeah.
On the back of that news. Do you feel that this lockdown is just a temporary hit to these stocks? And in the long term, actually, there's still going to be the same prospects that we had earlier before the pandemic hit?
Well, as you've mentioned, yesterday we've seen a very strong performance on the two stocks that you mentioned, Megawide and Cemex, jumping by almost double digits on relatively heavy volume on the news that the government will finally allow construction activities to resume even under ECQ. There could be a little short-term trading opportunities there, as momentum may likely spill over at least in the next few days. Although if you look at individual stocks, I would say that generally speaking, both of them are still on a major downtrend. Actually,
Okay.
even before we've entered the lockdown environment, both of these names were actually surprisingly already turning down, despite the fact or despite the theme that the build initiative by the government should be positive for construction companies. But we haven't actually seen that being reflected in the construction related companies.
Do you mean that they were not as sold off as other stocks? Have they been more resilient?
No, no, no. Well, what I mean is, yeah, yes, they were sold off, but in fact, their downtrend were actually more pronounced and more gradual, I should
More
say.
pronounced.
Not as
Okay.
yeah.
Okay.
So
And do you feel that because of that, it's actually a good time to be picking them up, given that, just one announcement like this
yeah.
caused a double digit surge already, which brings them,
Mm.
does this bring them back to fundamental levels?
No, not necessarily back to the supposed fundamental levels, because like I said, well, like you said, even if for example the ECQ is finally lifted, I still expect some restraint in terms of construction activities. It may improve, but not necessarily to the point that it reaches 2019 or 2018 levels. Definitely, there will be improvement, but in terms of capacity, in terms of how much, how big, perhaps not yet to those levels that we have seen in the years past. Maybe, perhaps next year. In terms of
Mm-hmm.
investing, if we're seeing, for example, um, production or active construction activities to finally catch up, let's say perhaps not this year but perhaps in 2021, then if you're looking at for 2021, then yes, perhaps putting some money and leaving it there uh, could be a good idea. But in terms of trading, I mean, trading, basically you're basing your decisions in terms of price action. And price action, while there's a rally that we've seen yesterday, generally speaking there remains to be on a downtrend. so
Okay.
so there.
For mega wide run, because you mentioned that the construction arm could continue, but there's still a huge part that is very, linked to the airport business
Mhm.
and operations. Do you feel that they will be taking a much more significant hit?
Well, in terms of P- PP, because Megawide is more of the projects that they're doing is more of in line with the PPP initiative. First, an example that you've given is the airport. So I think uh, part of the initiative of the government is still to resume the operations of some, or at least most of the PPP projects that they were already doing prior to the COVID lockdown. So I think eventually it will continue.
Okay, now speaking of airline industry, I'll just take out for you guys the how our airlines are performing. Now there's new news again. They're asking for the Congress for 8.6 billion pesos in monthly assistance here. And that actually might be granted given the fact that there's 500,000 indirect and direct workers that could be displaced by this industry. Tell us, have they been enough? Have they hit the bottom? This has already investors already priced in all of the canceled flights. They've given a lot of guidance already. They've already said 20 to 30%, even regardless of when this is lifted. So is there still so much more uncertainty coming out of this industry?
Danny, from my point of view, if there's one sector that even an investor or both investors and traders should avoid, is the airline industry.
Okay,
First and
even at this
foremost,
price.
even at this level, yes. First and
Wow.
foremost, the airline industry, compared to any under the is one of the most leveraged in this highly capitalized and leverage industry. Um,
Okay.
so with their operations essentially at a standstill and fixed debt payments uh, uh, on schedule, then it will be hard for them to actually service this ongoing fixed expenses and that, given the fact that there's actually no cash flow that's going into as of the moment.
Okay.
So, and
You don't
that's
see
actually their.
a V-shaped recovery in travel at all.
No, no, not at all. Because, for example, even if, for the sake of argument, the ECQ is lifted on May 16, I doubt that the population or consumers would immediately go out of their way and
Okay.
resume their vacations, right? Because there's still a risk of this of the coronavirus going around without any vaccine on hand. I doubt that consumers or travelers would still opt to
Okay.
travel
Still
to
very high
travel. Yeah,
risk.
yeah.
So hindi sila nangangatid because according to Lance Gopuri, everyone's dying to travel. I'm dying to travel, but you're right. I mean,
I
there's still
I highly doubt. I highly doubt that. I highly doubt that.
okay. Let's move on to properties. Ayala Land. Can you explain what's your reaction on the first quarter earnings? Was this a surprise? I mean, down 41% in the first quarter. It was just 2 weeks of a lockdown. What's going on here?
Well, for one, Ayala Land, back, even if you look at the 2019 levels, there were actually not anymore launching much new projects, and that's one of the reasons
Okay.
why the previous I mean at least 2019's figures were not as good. So obviously going into 2020, especially with the pandemic in place, obviously their project launches would would cater some more, right? Especially while during the ECQ, there's no buying and selling activities that were ongoing. So definitely, I'm not surprised at all to see Ayala Land's profits to dip by 40% in the first quarter.
And you're saying that this will be continuing, these types of dips will be continuing, and we might be seeing even worse performance going forward. Or will they
Yeah.
manage in
Well,
some way? You know, they're
so
with the BSP's measures, with more loans probably on the table, maybe a lifting of the ECQ. What's your outlook on properties in general?
well, some recovery obviously will be on deck relative to first quarter and second quarter, of course, right? Because of the low base. But in terms of year on year basis, relative to let's say 2019 figures, while a recovery was in deck, uh, I doubt that real estate companies would reach the level that they had back in 2019, precisely because of the fact that at least 2 or 3 months were already off the table. Now, moving forward, even after the ECQ is lifted, um, you know, consumption, buying of properties, I think consumers will somewhat restrain their buying activities. Why? Because of the damage to their wealth that this particular pandemic have caused. Imagine,
Okay.
Danny, businesses and jobs have been threatened in the past 2 to 3 months. So given that particular event, I doubt that consumers will be that aggressive to to go with their original plan in pursuing their property purchases. On the business end, I think Ayala Land is aware. Ayala Land, and same with other real properties, are aware of this, given the fact
Okay.
that real estate sales, for example, is seen to weaken because of uncertainties. Um, Most likely they will also reduce their capex, their project launches, and their capital expenditures. And I think a lot of companies in the first quarter report have already announced the reduction of their capex moving forward.
Okay, so not very bullish on the property space. People are going to be more discretionary in terms of their spending. Ron, let's end. It's close to 11, but I don't know if you can give a guidance. A lot of analysts have already cut their forecast for the year, and is it actually possible to make calls on the index at the moment? Given, of course, there's actually a lot of better value. More trades last week, and also even with the foreign outflows, those outflows are slowing down. Tell us now what there, or maybe you have different scenarios on the year end calls.
Well, year end is still months away, and like you said, there's still a lot of uncertainties and risks that are on deck. Presently, the market has already rallied by 40% off of its March lows. Given that
Okay.
fact, I'm in the position that the index has to at least consolidate, because a 40% increase in a span of 2 months is actually quite a performance. Quite a performance already.
Okay.
So the index has to at least consolidate these gains or even see another pullback. As to its direction moving forward, it all depends whether how the second quarter have been impacted by this ongoing lockdown, and how consumption behavior will be post COVID-19. So still
Ron,
a
do you
lot on
have
the
an
cards,
entry? Do
Danny.
you have an entry level, a technical entry level for the
Technical
index?
entry level. If we are afforded, I'm not saying that we shall revisit our lows, but if we are afforded that particular opportunity, that the index, for example, dips again to let's say 5,000 or 4,500, those are the levels that
Wow.
are good.
Okay, so still
Like
some
like I
downside
said,
risk there. Yeah.
if we are afforded.
if we are afforded that. Okay. But meanwhile, waiting and seeing how the second quarter will go and the policies
Yeah.
in place, especially at noontime today, to understand how the direction will go. This is still not yet a trend, an uptrend,
Yes.
which says that there's still a lot of downside risks on the table. Thank you so much for joining us in today's broadcast run.
Thank you, Danny.
And that's the first look into the business day. Today is May 12, 2020. Catch us again tomorrow, 10:30 a.m. I'm Danny Laurel, and we are One News.